This is our Forex blog for October 16th, 2013, and today I spent most of my day working on putting in about 20 different new support resistance areas in our signals, and I'm not quite done with it yet, so I can't show our signals today. However, I just want to do a quick blog video. One of the easiest ways of trading, in my opinion, is using our currency indexes. You can actually see what each individual currency is doing, like the dollar, the yen, the euro, the pound. And when a currency is underneath its hourly moving average in the middle, it's in a downtrend. When it's above the hourly moving average in the middle, it's in an uptrend. It's likely to go up, and you can see this one did. When it broke down from above to below its hourly moving average, it had a very strong downtrend, the pound. So did the euro. Look at the dollar when it broke from underneath to above its hourly moving average. Explosive move up. That's what typically happens. So the hourly moving average on each individual currency tends to act like a filter. The green one is the 15-minute moving average, and it's more of a short-term trend. Oftentimes trends, once they get above there, will work their way up to the hourly, and if the downtrend is going to continue, it's going to stall there and go down. If it breaks through there, then you can get into a new uptrend pretty early into the move. Notice getting into this move on the upside here, downside here, upside here. It's pretty early in the move. Our containment bands tend to contain price. So when price hits the outer bands, you're likely to get a reversal. Reversal, reversal, reversal here. Obviously it doesn't work every time. It went below the lower band and continued. But you start looking for signs of a reversal, such as a double bottom, when it's outside the bands, and you're very likely to get a bounce. Here are some of the other currencies, just to kind of showcase most days price will bounce off our statistical based containment bands. Alright, so how do you make money with this? That's really what everyone wants to know. Well, what you do is you find a currency that's super strong, let's say like the New Zealand, the Swiss for a couple hours, the Australian at 10 o'clock, and you buy that strong currency versus one that's weak. It's underneath its hourly moving average and is trending down. And when do you get into a trade? Well, basically the best trades are when you have a strong trend and you get into a pullback. So it's trending up, you buy the pullback, you buy the pullback, you buy the pullback. You can see our perfect oscillator is at the lower containment band on these instances. That's usually a pretty decent place to get in. And all you got to do is find a currency that is weak to buy the Australian against. So at 11:30 right here, the Australian's strong. You can see the Swiss is weak right now and has a little bit of a pullback. 11:30, the Australian Swiss is likely to go up. The CAD has been trending up. It's way above its upper band. It's likely to pull back significantly. And you can see that the weekly and monthly trend for the most part down all day, and the Australian strong. So me personally, even though the CAD is super strong, the longer term trend is really down, and I would look to go against this trend, because anytime something goes outside our containment bands, it usually reverses, and by a significant amount, not just this little amount here. So let's bring up a chart. I mean, this is really how easy trading can be. Australian Swiss, or I'm sorry, CAD, at 11:30 is very likely to go up. So you're looking at this chart for signs of entry. Notice, 11:30 right here. You don't really want to buy a currency that's already going up. You kind of want to wait and buy a little pullback. But you can see over the next few hours, the direction was to the upside. And that's how you use our tools to anticipate very likely statistically based moves. Let's take a look at the Swiss here when it's at the upper band. Notice the weekly trend's down, the monthly trend's down. It had trouble getting through the bands the previous day. This is a pretty decent place to sell the Swiss, and you want to sell the Swiss versus one that's maybe strong. The New Zealand was going up. You can draw fibs, trend lines, everything on these currency indexes. And this one is right at the 50% retracement. I'm sorry, I didn't draw that right. Let's put this down here. It's very close to the 50% retracement, and it's already gone down 38%. This is one that's likely to go up because of how strong the daily, weekly, monthly trend is. if you get into a trade and you lose 5 or 6 or 10 pips, and then you take it, let's say it goes down a little bit more and finds support here or here, and then bounces. Well, the point is, when you're trading a currency that's super strong on a pullback after it's gone up, the first trade doesn't always work. But if you take a couple of them, you're bound to find one that moves 30 or 40 pips your way. So let's bring up the New Zealand Swiss, and again, this is around 8 o'clock. We're looking to buy this. See this, 8 o'clock right here? On the chart, you can just simply draw a trend line above, those bars, and when it breaks that trend line, you get in. Boom, so you're in right here, let's say, and you put your stop just right underneath the low. You're not even risking 10 pips, maybe a pip or two underneath the low. And most times when you're trading a trend like this, it's this strong, the daily, weekly, monthly trend's up. So I would say your profit target is up here around 76.80. So if this trade works, you're going to make 24 pips or more, and you're going to risk less than 10 pips. And if it shoots through this profit target area and goes up to the high and stalls, you've made another 10 or 15 pips. If it shoots through there, there's no telling how much you can make on the trade. So you're in the trade, it's going up. All right, stalled where I thought it would. So I'd exit half my trade here and I'd use a trailing stop on the other half. So more likely, since it double topped at the high, I'd be out of the second half here. So we made 20 something pips on the first half and maybe 30 on the second half. We netted 25 pips on this trade while risking 10 pips. That's the key to trading. Now, obviously, sometimes these things continue to go up without pulling back. Most of the time, after moving 30 or 40 pips, they're going to pull back 10 to 20 pips and then go up. And you can see this one did go up even more. Not much, getting out of your second half of your trade here at around 70. You missed another 14 pips or so. But I'd much rather take 20 to 30 pips and be out of the trade and go look for other opportunities. And that's really what you want to do with these. You can see, for example, the euro. You can analyze swing highs. You can see, kind of a trend line here. You can see a trend line there. It's in a really tight range. The daily and weekly trend is down. So ideally, you don't really want to be buying this. But you certainly can if it breaks out over this trend line here. It touched twice. If it comes up to it and stalls here and breaks out, very high probability breakout for the euro. And you want to trade it against a currency that's weak. The yen has been underneath its hourly moving average all day. So as we scroll forward in this, if the euro breaks out, which it does right here, we want to we want to buy the euro yen. It's that simple. And again, this is around 7 o'clock, so let's scroll this one back too. We'll make this the same color. So when we scroll one back, we'll see them all. Scroll this back to 7. We'll make this chart smaller. And you can see this is a very choppy chart. You can see the high of the day here. It's coming up over, close to this swing high right here. And we really want the euro to break out to the upside, and we want the yen to start falling. So if you bought that breakout, let's say around 20, you can put your stop maybe underneath this bar right here at 15. You risk 5 or 6 pips. And you're looking at the euro, the yen chart right here. You want it to go below the low. It's been going sideways all day, but if it breaks down right here, anytime you have a sideways rectangle pattern for 2 to 5 hours or more, if it breaks down, you're likely to have a huge win, astronomical. The euro rallied up, pulled back, had a higher low than before, so it was less weak here than it was a few hours before. The last move was to the upside, and of course that trend continues. And so if you watch this, if the euro is going up, you stay in your trade, even if the yen is going sideways. If the euro is going up and the yen falls, you're going to make probably 20 to 30 pips. Look, it's exploded up. This one, unfortunately, is not going our way yet. So this is near the upper containment band. I would probably, if I was in this around 15 to 20, I'd take 10, 15 pips off the table since the yen is not falling. Put my other stop underneath this low right here. So I would have probably got stopped out there. The yen's trying to go up. The euro's up a little bit too much. We wait for a little bit more of a pullback. We would really want to see the yen start to fall, which it does right here. So if you had bought again right here in this breakout, the euro's at the first containment band. It can go up a little bit more. The yen's starting to break down. All right, the yen's falling, the euro's going up. Again, the euro is likely to stall at this containment band. But if the yen still falls, if this goes sideways and this falls, you're still going to make money. So I would put my first stop exit half the trade at 45. It goes underneath there. So I'm out of half. Euro's still up at the high. The yen's still falling. And the euro kind of pulled back a little bit. I'd be out of the second half. So I would have got out around 45 and maybe 50 on this trade. And it's likely it might go up a little bit more, but not much. As you can see, it went up another 20 pips. If you wanted to buy that next breakout, that's fine. You know, it kind of stalled a little bit for 40 minutes. Notice the euro pulled back. If you bought this breakout here, you want to see the euro go up on the index chart, and you want to see the yen fall. It's that simple. Euro's going up, yen's going down. Stay with the trade. Now the euro's falling, so you might want to get out of this trade. The yen's falling. You know, most days the lower containment band is where it's going to bounce. It usually does not go underneath there. You know, obviously today it did, but actually I think it was the pound that did. This one didn't. So use the statistics to your favor. Buy the strong ones versus the weak. And if you see one currency go up that you bought versus the one that's going down that you sold against, the euro yen, you're basically buying the euro and selling the yen. You want to see the yen fall and the euro go up. If so, you're going to make 20 to 50 pips. If one goes up and the other one goes sideways, you're going to make 10 to 15 pips. If both of them go sideways, you know, you want to exit. It's that simple. And most days I show our Forex signals, but today I ripped the code apart and I'm adding a database for all of our support resistance, and it's just you know, not in a position to show today. But hopefully tomorrow I get all the support resistance areas in there. I've pretty much tripled. There's 300% more support resistance areas I'm using. I'm putting in weights, and lower probability areas have to have stricter rules. There's going to be more rules for the lower probability areas, like the previous day's pivot points. But you know, most days when a currency goes outside its containment bands, the previous day's pivot points tend to be very good places to be buying. Or if it's up and above the upper band, you can sell those. Inside the bands, you have to have much stricter rules. But you're going to find a lot more trades that we previously were not able to show with high probability show up in the next week or 10 days.